Welcome back. In the previous class, we discussed income statement and we discussed why it is important to bifurcate your income statement into three categories of gross profit, operating profit, and net income. Class, we took a simple Excel example. In this case, we're going to take a real life company. We are going to take a company which we all know. Let's take the income statement of Apple Incorporated, right? So this is the income statement of Apple. Now to make it, here we have the income statement of Apple. The income statement is given in 3 months and in 6 months period. Now for practical purposes, let's just take a 6 months period of income statement of Apple dated 27 March 2021. It starts with revenues. Revenues means sales. Sales of products and service. So Apple has effectively sold $168 billion of Apple products in the last 6 months, and it has charged services and collected revenue of $32 billion in those period. Here we have the cost of sales. Now, Apple provides the cost of sales of products and services separately. So that gives us the total cost of sales of $118 billion, out of which the cost of producing the products is $108 billion and the cost of providing the services is only $10 billion. So you can effectively see here, just by looking at these figures, that it is much easier to provide services. It is much profitable for Apple to provide services instead of selling the products, right? Because the GP margin is much higher in services category. After getting the GP gross margin or the gross profit, we deduct what? Our other operating expenses. This include your research and development, your SG&A expenses, right? Like I said, every income statement in the world can be bifurcated in these formats. So we have total operating expenses of around $21 billion. That gives us an operating income of around $61 billion. And the other income is basically that income which is not directly associated with your business. For example, let's assume that Apple has invested in some investments, and from those investments it has earned a revenue or an income of $5.5 billion. That usually comes after the operating income. But since it increasing your profit, so that is covered in your operating income. After that, what we got? We get our taxable income. The taxable income of Apple is $61 billion. From those taxable income, we deduct our taxes. So we get our taxable income of around $61 billion. The Apple paid taxes to the government. And finally, the net income of Apple is $52 billion for the period of 6 months, which ended on 27 March. Now these figures, these earnings per share is applicable. What does it mean? It basically means that Apple has an X amount of shares, and when you take this $52 billion of income and you divide it by the number of shares, the number or the earnings per share is only $3.11. Now I have reproduced this income statement in Excel for a simple calculation of gross profit margins, our operating profit margins, and net income margins. We have taken the total sales, we have taken the cost of goods sold, we got our gross profits. Since Apple is disclosing the bifurcation between products and service, we are able to have the gross profit margins. In products, the Apple has a GP margin of 35.51%, and in services, the Apple GP margin is almost 70%, which is extraordinary. So that means for every dollar of product sold, Apple earns about 35 cents on that product in terms of GP margins, and on every dollar of service charged by the Apple, it earns about 70% of that revenue. That means it earns 70 cents for that service provided. Now we deduct all the expenses, and after deducting the expenses, since it is very difficult to bifurcate your other operating expenses in products and services, the Apple has provided just operating profit. That comes out to be 30%. That means for a dollar of revenue, and the revenue may include revenue from products and services, the dollar of revenue is providing Apple a 30 cents of income, which is extraordinarily profitable income. From that, the Apple pays tax on that income, and the net income profitability or the net income margins of Apple for every dollar of product sold or every dollar of sale is 26 cents. which is extraordinary margins. So instead of just looking at the net income of the Apple, what we looked at? We looked at the GP margin of the Apple for products and services. We looked at the operating margins of the Apple, which comes out to be 30%. And since Apple is a debt-free company, we do not have much difference in net income margin and operating margin. The only difference is the tax which the Apple has to pay to the government.